technology is certainly going to be a winner, and we think that is going to be the case next year as well. But we also expect to see a shift towards more pro-cyclical sectors. So by that I mean financials, industrials, materials. And really the reason why we expect this shift to take place, the industrial data is in the process of bottoming now and is likely going to accelerate through the first couple quarters of the year. So in that environment, investors are going to want to take advantage of that jump in GDP and rotate to those more cyclical sectors.
And what's going to be driving financials?
Well, financials, we expect interest rates to rise with the jump in pro-cyclical data. So, for example, I would focus on the ISM manufacturing index. That's an area where we see as it begins to rise, the U.S. 10-year is going to rise with it. And we've already seen it really since last August, where we bottomed around 1.4, 1.5, and now we're sitting around 1.9. So that move has already been taking place, and that is really what's been powering financials now in the other industrial sectors. We expect that to continue through 2020.
You think interest rates will rise next year?
I think they have the ability to rise incrementally, yes. I'm not saying we're going to blow through 2.5 or go to 3, but as industrial data improves, what's going to happen is we're going to see interest rates rise with that. It's going to feel like a better environment, and because of that, the demand for capital is going to be higher.
But you think markets are going to be taking that in stride?
Absolutely, yeah. Interest rates rising is really a signal of economic health, and that's really what's important. Historically, we've been told that as interest rates rise, it's negative for markets. That's true when you're at high interest rate levels, but when you're low, interest rates rising is a sign of an economic outlook that looks better. In that environment, you want to own risk assets, in this case, equities specifically.
So do you think the Fed raises rates next year?
I don't believe the Fed is in position to raise rates next year. I don't think the data is going to be that vibrant. What I do expect, though, is that we are slightly negative this year in industrial activity. That is going to improve. So I'm not expecting to knock the socks off for that portion of the economy, but nevertheless, that will feel like an improvement, and that's really what's going to power the success.
Okay, we just spoke about Disney, right? I don't know if you saw the latest movie, but nearly reaching that $1 billion mark. Disney has also been, a fantastic performer this year. How do you see the media space and media and tech space, the streaming wars next year?
Yeah, so a lot of those areas are driven by their own success. They have intellectual properties and catalogs which are really powering those companies. So earlier in the show, we were talking about technology being the winner over the past decade. I mean, frankly, that's likely to continue. And the reason why is it's not a function of valuations. It's a function of companies generating their own success. They have catalogs that people want to see. They're selling products that people want to buy. They're growing their companies at double-digit rates in many cases. That's the baseline expectation for a return when you're growing at a double-digit rate. We can debate what you want to pay for that, but that really is the baseline.
In terms of tech at large, though, do you not think that the cracks are starting to show a little bit? It may not be as straightforward for the decade ahead. I mean, there's regulation on the table. There's concerns about quality on Amazon's platform, for example. So does anything worry you in this space?
Okay, I think we can pick some anecdotal examples that there may be some issues, and I don't study the companies individually, but I think when I take a step back and I look at the balance sheets of many of these companies, they remain under-levered, cash remains high. When I look at the growth prospects, they've shown a propensity to continue to generate products which investors are looking for. So I think the table is set for technology to have another great decade. And frankly, I don't see a reason why that couldn't be the case. If you look back over the past several years, they've delivered on what they've promised. So they haven't been missing expectations.
Right.
They continue to beat time and time again. So they've shown the ability to do this.